I just wanted to do a mic check. You can hear me okay?
Yes, sir.
Great, thank you.
Very good. Very good. Perry, how's it going? Perry, I bet you'll like this episode, and so will Oscar, I imagine.
We are live.
It's going good. I missed most of the webinar today. I signed on for the first part of it, but I had a meeting with some folks at the bank. So I've got it recorded, unless you want to hit a high point for me that I need to know now.
Definitely watch it and get up to date with the positions. Those are already in the green, making some money. So, but we did have a little pullback, so you could still get in a decent price. And
yeah, I stayed just long enough to get in the position, so I'm good.
Oh, good. So you hit a nice little quick win, and
yeah,
good, very good. Let me do a quick overview of what I wanted to showcase. I'm going to leave the microphones open, so feel free to interrupt, and we'll go from there. So we put out a 1% total risk in our portfolio on the QQQ with a pretty outrageous put, the 150 strike. 303 days to expiration. QQQ was at 217 at that time. And I'm just looking at the value today, and it's up about 12 and a half. So we went from $3 buy-in, and we're now up by about $9 or $900 a contract. So not too shabby on that. And I do it to, so about $8 there. So we're doing well on that play, and I do believe this will go up substantially from here. So that trade's doing well, a few 100% gain. The other trade we have is suffering is the silver trade. Let's see. So we bought in for $1, and it's currently trading at, let's see, the 24 call. So it's currently at 70 cents. We're down about 30% on this 1% position, but we're up a few 100% on this position. Now, if you missed the QQQ trade, unfortunately, the volatility index has gone up dramatically. So we got this one at really well-timed trade on this one before the VIX had just gotten completely out of control. I probably would not take this trade today. Just because the volatility index has gone up a lot. But on the other trade, if you did miss this trade, I still do like it. And again, we have a full year to start to see this one turn out for us. So that's the two trades we have open in the boot camp. Now, the opportunity I'm looking for in the stock market, once the time comes, is going to, I'm still doing more research, but my basic premise for all of this is that the disease is going to spread like wildfire. There's nothing much we can do about it, and it's probably going to cost the government trillions of dollars a year. I'm going to say for 5 to 10 years, unfortunately. So that essentially means the government must incentivize investments into bonds, which is why I'm so confident in the TLT trade. But what are they going to do with all that money? I don't think they intend to put the healthcare system at the government's level. I think they're going to hand it right to the private sector. So there's 3 ETFs so far that I like that have different exposures. And again, I'm still waiting for the entire stock market to really collapse here. And then I want to get into trading these in our Monday, Wednesday, Friday trades. But because these are not the SPY, they don't have 3 expirations a week. So once we see the VIX, I think I'm going to call 100 plus VIX in the near future. So that'll probably be relative to the timing. We'll most likely start out by selling a put to get a discounted price on entering our position. And again, I want people really freaking out. I mean, really freaking out, serious blood on the street, 50% plus crash in the SPY before I'll be willing to start trading into these positions. And we'll start off by likely selling out of the money puts on these 3 ETFs. And then if we're unlucky and get filled, we'll be happy to fill the position because I do believe these will be the companies that primarily benefit from the change in our economy, which again, it's going to change dramatically until this disease is ridden. And the ramifications and costs of this, even if they do come out with the vaccine in 14 months, will probably, again, I think last for a long time to come. So let's take a look at some of the ETFs I'm interested in. And again, the concept here is the government must raise trillions of dollars to fight this crisis. And that money will be handed to a handful of core groups. So I'm sure both Oscar and Perry will have some good insights into this. Specifically, I'd imagine that Perry would have some good insights into IHI, the medical devices ETF. And I would believe that Oscar probably have some good insights into some of the companies in XLV. So this is still way out, probably months away, and I'm doing a lot more research. But again, the premise is we must raise trillions of dollars. To do that, they have to push the bond market way higher. That's going to take out resources from the private sector. And then I think they're going to reallocate that capital into healthcare related. So we have a handful of ETFs I'm looking at, really just 3. So we've got XLV. So we got some of the big players here: Johnson & Johnson, United Health. And you can go down the list. This is the largest assets under management in a healthcare ETF. And I do believe these, sorry, I hate that damn. I do believe these companies will need a lot of capital to be able to handle what's coming in, and that the government's going to have to fund that, again, through issuing treasuries and protecting the bond market. So that's going to come at the cost of the stock market. And why we got to be careful on timing. We don't want to jump into this until the money's been raised, which will crash stocks, and then the fiscal plans are approved, and somewhere around that time period, I think will be the bottom and time to jump into this. So again, I'm not thinking right now they have 8 billion. That's a joke. I think no less than several $1 trillion a year will be required to handle the crisis unfolding, and that it'll primarily go to these groups of companies. And I'm also still open to suggestions and other ideas. I like e-commerce, but I don't think e-commerce will have the benefit that the healthcare sector is about to have, directly funded through the government. So we got some very large companies here in XLV. So that's one. Next one we're looking at are pharmaceuticals. So really, humanity is in a race to create vaccines that we've never created before successfully. Apparently, we did create some sort of vaccine for SARS, and it maybe worked on mice, but it ended up killing them. And that was 17 years ago. So I think they're going to throw as much money as necessary at every hopeful biotech company to solve this. And I also think that we're going to start planning for future potential bio disasters. So I do think this is a good sector, again, after we've had a massive sell-off. And I think we can get into these cheaper than current. So you got your Gilead right there at the top, but a number of others. And I'll come back for comments from everybody in terms of any knowledge you already have about this. And then finally, medical devices, I believe will also be important for what's coming under with Abbott Laboratories as your top position. So again, we're probably months away before making these sort of trades, and I'll do a lot more research. Oscar, can you start off by giving us any comments on what your thoughts are about how we're going to deal with this crisis and which companies would benefit if the government were to start giving trillions of dollars of budget towards this?
Well, I can't begin to tell you what the government's going to do regarding funding us. I'm not sure.
Well, here's what I'm seeing happen in government. We're going to start having government officials plopping over dead here. So I think what they've done in the past will be different than the future. Let's just
That's why it's going to be difficult to call. Because God, you know, when you think the rational move is this, they do something completely different.
Well, assuming they use the private sector, let's just say they use the government to raise the capital and then they handed it over to the private sector. Do you believe these are companies that would benefit from
Absolutely.
Yeah.
These are the companies that are going to benefit.
Now, are you involved with any of these companies yourself?
Well, we've got contracts with a few of them to provide pharmaceuticals, basically.
Okay. Okay, good. Now, let's see. Anybody an expert at biotech in any? I know for a fact that they are betting big on Gilead coming out with a vaccine here. Anyone have any insights into the bio realm that cares to share? Any insights? I can guarantee you Gilead's going to get a huge amount of capital from the government. Okay, well, how about Perry with the medical devices? That was his prior. He was actually selling, you were selling ventilators, weren't you?
Sorry, I was muted. Yeah, we did a lot of vents and oxygen CPAPs. If you scroll down, I think ResMed there, RMD, that is a company that does a lot with vents that they're not what you would see in the hospital, but it's what you'd use for home use.
Okay.
Which is actually perfect with, for this particular disease or this particular virus, because they're trying to recommend so many people to stay at home.
Yeah.
Which is,
how much does one of those home kits run for? I was looking at something and it was coming in like 10 grand for a makeshift ICU setup, but I don't know if that's obviously not affordable for many people.
No, you could get those that we used for, oh gosh, it's been a while. I'd say they were around, they were 5,000, 7,000, somewhere in there was what we were paying for them.
Okay. Oh, at wholesale cost?
For a regular CPAP?
Well, no, those were vents for vents. Okay. CPAPs, you can get those for a few $100s now. Yeah, they're pretty cheap. But I mean, it'd be the perfect setup. Most of healthcare in what I did is now gone to corporately owned healthcare. So most corporations now are owning that. You could look at Lincare, and I don't know how much of this will go towards home. You're looking at the manufacturers there for the most part.
Well, I think the way they're going to deal with this is a combo. The sickest will go to makeshift tent ICUs and probably have another level of semi super sick people. And then everybody else stay at home is what I'm guessing.
Right.
So yeah, I think that's just the dead obvious play here. Who would have guessed that Trump would probably have to come out with healthcare for all, huh? Oh man. So I think that's what we're going to see: free healthcare for anybody with coronavirus, free all sorts of stuff to stimulate this. And so so that we're already, it's Oscar's telling me right now healthcare is about 18% of GDP. Is that right, Oscar? So all of a sudden this sector could go to a huge chunk of our total GDP. So that will come at the cost of other industries, obviously, and allows us to focus our capital. Let me look at some charts here. So once again, we could see dead obvious these sectors will benefit from the crisis, and the government's going to have to fund that, so it won't come out of the consumer's pocket. Consumers somewhat strapped, and if we just leave them to their own means, then they're going to infect everybody. So it's really mission critical that we do take care of everyone. And this will likely infect or affect just about everyone. But with that, you can still see these stocks are still selling off here. So timing will probably be related to seeing that VIX pop somewhere around 100. That'll probably be a good signal to drop the QQQ put and then start selling puts into these positions. So again, my strategy initially will be to sell an out of the money put weekly to get some pretty safe profits. And then if the asset did go below the put we've sold, then we will keep that premium and allow it to just be filled, because these are the stocks that I'm becoming more confident that I want to own once we think we're near a bottom. And so,
Jason, this is Oscar. You asked me a question.
yeah, what's healthcare about 18% of GDP?
Yeah, about 1/5. I mean, it was 17 something last year. And
That's
it's
going to have to
tracking higher.
double at least, I'm thinking.
Possible.
Yeah,
Perhaps
so,
not. Who knows? Because I mean, if you kill off enough of the elderly, your Medicare expenses all of a sudden go down.
well, short term, yeah, I guess long term, this might save the Medicare system, the medical system, but short term, I think it's going to cost a small fortune.
Sure.
Jason, that's exactly the comment I was going to make, because this is going to be if the elderly truly are, I mean, I know everybody's getting it, but the elderly are probably going to struggle with it more. This is going to really tax the Medicare program.
Now, is there any specific companies that benefit from more money going into that program, or is that Johnson & Johnson?
Well, that's a good question.
What's the question again, Jason? I barely heard you.
If we had to expand the budget for Medicare, who would, is there a private company that benefits from that, or is that all state?
Not really. Mostly the providers.
Okay. Now, between the two of you, do you feel like there's any major publicly traded company that's not covered in these three screens that would benefit from massive handouts from the government to deal with this crisis? Or do you think this really is the big players right here? We got Johnson & Johnson, Gilead, and Abbott Laboratories are the top three right here.
The one that falls under the provider would be UNH.
Okay, well, that's number 2 right here.
Right. And then the rest are really pharmaceutically related or supply expense related. I think the least of the impacts will be on your robotic surgeries, which would be EW and a couple of those other companies.
Okay. So yeah, I do think so. I'll be working on allocation size per ETF, timing, and again, the strategy will to get filled. We will. Does everybody understand if I say we're going to sell an out of the money put to get a discount to enter the position? Does that make sense, or would you guys like an example of that?
Yep, that makes sense. Most people are not familiar with that.
I'm going to do an example. Good point. Okay. Let's just say we thought the bottom was here and that fiscal spending would be approved tomorrow, and this is the bottom, or we believe it's near a bottom. How would go about playing? I don't think that. Yeah, so Mark has a good comment. Instead of boomers, of which I'm one, spending their considerable money on travel and tourism, it goes to healthcare. Yeah, that's bottom line. Everybody's going to be incentivized to fund their government. And that's what we saw with the Fed action today. That's what I was predicting they would have to do. And pulled back a little bit. But again, I think the big picture is TLT's going towards 300 in 2 years, which is absolutely batshit crazy. The first to admit that, but I don't see any other way to fund what we need to do. So those resources have to be pulled out of other sectors. And so you nailed it, Mark. We're going to be, as a collective whole, not just in the United States, but globally, we're going to be pitching in every little penny, which represents the resources of each economy to healthcare, to deal with this sickness. And the strategy for survival has to be to go in and out of lockdowns to slow the spread. Because if we let this just grow exponentially, it will melt down. It will be in Mad Max territory in short order, within 30 days. So my thought is they will have to play the fine line of keeping the economy going so we don't all starve to death, and going into lockdowns where we have hotspots to slow the spread. And that this should take no less than 2 years to play out. I mean, even if we had a vaccine in 14 months, which Not an expert at it. I'm going to spend more time digging into this. Let's just pray we get a vaccine in 14 months. Even if that was true, I still think this takes 2 years of pretty heavy resource hogging in the economy, which must go to healthcare. So the Fed, all the central banks really have to incentivize investment into the bond market so that the government can take that capital and put it to use.
Hey, Jason, wouldn't our historical experience with H1N1 be indicative of what this will be?
Well, the problem with this one is it appears to be airborne with no symptoms, with a 20% complication rate. So I just don't see how you get around that. If we're going to infect 8 out of 10 humans over the course of 2 years and even have a 1% complication rate that requires serious medical attention. So I'm just looking at what's unfolding. And so well, first of all, China's trying to say they've completely killed the virus and they're going back to work and they're all jazzy. But remember with the 1918 swine flu, same thing. They all thought they had it beat, and then wave 2 and then wave 3 came in. And so that wiped people out for 2 years. So what stops the spread? I guess that's the real question. Will a lockdown effectively stop the spread? I don't think so. I think it'll slow it down. So I'm going by 80%, 8 out of 10 people will be susceptible to the disease, and that somewhere around 10% will need some form of hospitalization. So if you look at those numbers, it's just too big. It's like 100 times what our current healthcare system can handle. So if we say some miracle, we get that to, if we somehow only infect 10% of the people and only 1% need serious healthcare, well, I'd still think that's about 10 times what our healthcare system can handle. So from that standpoint, I think the government must raise a lot of money, which is good for TLT. And I think they must hand that cash over to the companies who can immediately deal with the problem. And that's that private sector we're looking at. So, how long does it take to get a vaccine distributed to 7 billion people? That's not going to happen overnight. What's that going to cost? So, yeah, we got a big problem. And just big picture is we have to slow the spread. Otherwise, we're going to be 100 times what the hospital can handle instead of 10. That's one. But 2, we can't stop the spread too quickly without starving everyone. So that means that they're going to have to toggle back and forth with lockdowns and periods of working, and then it starts to spread, and they have to do an emergency lockdown. So I think society is going to get pretty good at going in and out of lockdowns and quarantines. I wouldn't be surprised if China's spread and if you saw those hospitals, there's thousands of people standing out in front of them. So I really don't trust anything coming out of China claiming they've slowed it down. South Korea had a sudden spike. I think what you're going to see is you could do a lockdown and slow the spread and things look good, and then you go back to normal and it comes raging right back. So that's unfortunately what I believe is going to happen with this disease. And best measure is to just watch other countries, because that gives you a glimpse of what our future may hold. And so what's Italy, and Tom Hanks has coronavirus, for heaven's sakes. Imagine what's going to happen when our government officials start flopping over dead. They're going to be writing some big paychecks, and I believe that money will go right here to these 3 groups of companies who can solve the root problem. But yeah, I'm totally, what's the best news for humanity today? I would say is 2 things. One is they're seeing it, they're maybe lowering the death rate in South Korea with some treatments, but that still doesn't stop you from getting sick and ending up in the hospital, which is the real problem here. Not necessarily people dying, it's people needing hospitalization. The best news today is Singapore, which is a very, they're not the normal country by any stretch. They have 80 to 100 degree weather, tiny population, easy to quarantine the whole country if they need to, super high tech, super rich. And the growth there has slowed down at least day over day. So that's a good sign. But outside of that, I'm not really seeing a whole lot of hope that we can really stop the spread and stop the necessity for hospitalization.
Jason, just the point. My understanding is that Manila is shutting down their airport at this point.
Oh, really?
Yeah.
Yeah. So we're at the tip of the iceberg of the panic, from my measure.
Hey, Jason, to go along with your hospitals being overwhelmed, I just read an article about Italian doctors are basically being given battlefield instructions where they have to decide who lives and who dies. And, they got to make the moral dilemma. If this person is going to take a ton of resources and they're probably not going to live anyway, they're going to move on to someone who's more likely to live and maybe less resources. So they let one go to save two or three.
Yeah.
And that's where they are now.
I was telling the doctors I know, I've been communicating with, that, World War I, World War II, the military were the real patriots. But in this war, it'll be the doctors and nurses. And there will be a lot of casualties for those doctors and nurses, I'm afraid. I'd be surprised if no less than 10% of our doctors and nurses are infected, and a large chunk of those do die, which will obviously raise the cost of hiring these people. So
hey, one more comment on that. So in China, young doctors were dying, and I think I heard a new theory on that. Number one, their pollution gave them one strike against them, basically gave them all the lungs of smokers, whether they were or not. But the other aspect of that was that they were so overworked and so exhausted that their immune system was compromised because of their fatigue. And that's what caused the young ones to die, like Dr. Li Wenliang.
Well, there's an interesting, did you guys get all those YouTube channels I sent you on Tuesday to follow? There's some good channels. That's where I'm making,
I got them.
Most of my hypothesis is based on those 5 channels, especially the top fellow he's a pretty level-headed doctor. Well, he was a nurse. He was the guy who trained nurses how to be nurses. And so he's pretty level-headed. He's not making any wild claims, conspiracies. He only works with real data, real case studies, real factual evidence. So that's where I'm basing the infection rates and complication rates, is primarily from his data. And if his data is right, hospital system's 100 times at least underprepared. If he's only 1/10 right, the hospital system is 1/10 prepared. So we could be severely underestimating what this will really cost. So yeah, this is a huge problem. It's just getting started. I forgot where I was going with that, but so yeah, those 5 channels, very useful. The top guy, especially if you want to just learn how to protect yourself personally. I really like his channel. The 5th fellow on the bottom of it is very conspiratorial. I've been following him since early January, but he's been very accurate at predicting the future, including the stock crash, well before it was underway. So I've taken his info with a grain of salt, but those 5 channels are very good.
Yeah, that top guy, I saw one of the comments where it was one of the videos where he kind of explained the life cycle of the infection and recovery as your body deals with it. And then in the comments below said, I learned more in a 20-minute video than I did in one semester of biology class or, in med school.
Oh yeah, I really like it. I also like the med cram. If you want to get really zoomed into the anatomy of a virus and the biology. I had high school. I dropped out of college first year, started my own company, so I missed out on what I would have loved to do is get some advanced degrees in science. That was really my favorite subject at school, as well as math. So my education dropped off at a premier private high school here. But I will say that they do make it pretty easy to understand what's going on. So you get the big picture. And all those resources are so good, all 5 of them. And they all have their own angle and unique information. I don't think anybody has really made any of the exact predictions that we've made or really put it all together. But if you do listen to all the different information, I think you'll really gain a lot of value from those 5 and there's more, there's a lot more, but those are the 5 best that I like. Wow, look at this yield curve. So this move, let's talk about what our TLT predictions are, and I'll probably let you guys go today, okay? Let me,
I have a question about TLT.
Sure, please.
We converted my wife's retirement fund that had them sell everything, and we put 30% of it into TLT, but you can't buy downside protection, so it's naked. The other 70% we put into cash. Is that 30%, is that too risky, or should I do more?
Yes, right now I'm endorsing 40%, and the opportunity to buy downside protection is just outrageous right now. So our downside protection ends tomorrow, and we're going to be writing that with no protection here on out. So yeah, I like that position. Now, keep in mind, you could buy a put in your cash account if we did issue a put to protect your IRA or your 401k, whatever it is.
Oh,
so it doesn't have to be in the same account to do its job.
okay. All
But
right.
good question. Also, another good question. William wrote in saying, well, should we go all in on the TLT? What are we doing with all this cash? And so answer to that is no, I wouldn't want to take that much risk in a single asset at any point in time for any reason, even if I was 99.99% confident in the trade alert, which I am. And as you can see, I've been trying to figure out where to put the rest of your money to work. And I think it's going to be in the healthcare sector after we get a little bit more of a drop.
Okay. All right.
Oh, I was going to teach you guys the example of selling puts. I forgot what we were talking about. Okay, so let's do this. Let's talk about how we might potentially, go ahead, Mark.
Yeah, one is a quick question, then maybe the other one take a few seconds longer. One, is it helpful that I'm sending articles that I find to you, or is that just too much and you don't have time for it? And then the second question is, I know you said that TLT is not a company, so I'm wondering, how do they turn the bonds they're issuing, which is huge numbers, into shares of TLT? I don't quite understand how that works.
Okay, sure. Yeah, if you guys have any articles, please send them in. I can't promise I'll read them all. But rest assured, I'm pretty good at finding the right stuff. You guys know I'm a nerd and I study a lot. So I think everybody does agree with that. So if you do have content, please send it over. I'll do my best to look at it. But I never get through my reading list each day as it stands. So if I look at it and it looks important, I'll put it at the top of my reading list. So that's that question. Bonds. Let me first tell you guys about how I expect us to get invested into the healthcare sector when the time's right. And then we'll do a lesson on the bond market. And then we'll call it a day. Does that sound good to everybody?
Yep.
Yep.
Okay, great. So let's look. Okay, so we're seeing that even though it doesn't take a complete, let's see what the percent change is on these puppies. I mean, I like investing in healthcare before a crisis. I mean, it's just a dead obvious problem America's facing, and it needs more money to do it. So that is why it's been such a hot sector. As you can see, it's already up tremendously in each of these three ETFs. The pullback, yeah, I'll be carefully monitoring when I think it makes sense to enter. But I love to get products that are being, ETFs are being sold off for a stupid reason. So right now we have people selling all stocks, irregardless of the fundamentals. They're just realizing stocks are going down. I'm selling all stocks. So we have this herd mentality doing that right now. My bet, again, is that we're going to have to hand these fellows a lot of money to cope with the situation. So I think they will probably fall less than the general market. But because of the herd mentality, I do think they still have more downside ahead. So that's going to cause the relative implied volatility of these assets to rise, which makes it even harder to buy them. Because once again, we can't get cheap insurance. So our strategy in a high implied volatility world is to try to figure out what's the peak of the panic and then sell put options at the peak. So I believe the VIX, let me go to dollar. I think this probably going to go past 100. Some point above that is when I expect us to consider the strategy we're about to review. But let's just say we'd already done that and we thought today was a great day to start trading this. So let's say we wanted to make money on XLV. Well, I wouldn't necessarily want to just buy it outright. What I prefer to do initially, until I'm highly confident that the rebound was underway and that the VIX is going lower. So the time to actually buy the ETFs once VIX is collapsing, because then you can buy cheap insurance. So with the VIX perhaps above 100, there'll be a very handsome reward to sell the insurance. And if we sell the right insurance on the right product that we want to buy anyway, we can do so without having to risk so much money and take on so much risk just buying the underlying assets. So what does that mean? Let's look at the options. Okay, so I'm going to go 1 week out. So the strategy I intend to do until the volatility has collapsed is to sell weekly puts against these ETFs. And essentially, if we go under the price of the put, we're just going to keep the premium and allow the position to get filled. And so we're not going to be super greedy about how many puts we do sell. Now, if it doesn't go below that strike price, then we just get to keep a percentage of that premium and then sell a new put that following Friday. So we'll be trading this every Friday when the time does come. Okay, so we're looking at the March 20th, 2020. I'm going to scroll down to the puts. Let's just see what we could get paid to take on some risk today. Let's see, we got a chat box. Yeah, great way to accumulate something you want to own at a lower price. Exactly. Okay, so here we are looking at the option chain for XLV expiring next week. And, you know, if we wanted to go a few dollars down, we could get paid $250. I'm doing ROI calculator. So if we wanted to sell, say we wanted to sell this 83.33 put. So the risk would be 83.33. And the gain would be the 250 bucks on top of that. So that would put us at 875. Is that right? 200. Okay, so we could get paid 5% a week if we thought today was the time. Now, if that fixes at 100, we could probably get that same deal and get paid 10%. So what happens? Well, if the price of that ETF did go up, we just keep that 250 bucks and that's it. Now, if it went below the strike, so if this would crash from 86 to below 83.33, well, we're going to be only risking enough money so that we'd be happy to pick up the tab, buy those shares, and then keep that 250. And that'll be our entry point. Now, we might also buy a very cheap put way below to protect that. So we might be happy to make 2.5% a week and have a long put and a short put. So something of that nature will be the strategy to be brave when everybody's going to be in extreme panic mode. And again, I do believe that'll happen some point above 100 VIX, which is a substantial claim because last time we had something of that nature, it was very short-lived. We almost got there. So in 2008 crisis, we almost got to 100. Okay, let's go ahead and answer some questions. I see a few. I do believe you have to unmute your mic though. Murray, go ahead.
Yeah, I didn't get the message to get connected until I called in, and so I missed the first half. Did you make any recommendations as QQQ or silver or any other of the?
So we're up about 900 bucks contract on the QQQ trade. So we're up a few 100% on that. No change. Right. Silver's down 30%. No change on that. And we're talking about what we're going to buy instead of the SPY after the VIX pops probably to 100, which I believe will be healthcare ETFs.
Okay, so no new recommendations then today.
Correct. Yeah, no new changes. We're just talking about our intentions once we think it's a good time to buy. Instead of the SPY, I think the healthcare sector and the biotech as well as medical devices are going to be handed tens of billions of dollars to deal with this crisis from the government through issuing bonds. So that's why we want to be long bonds till the capital's raised, which is going to crush stocks. And then
so how many days do you think GDX will go before it reverses up?
I think in the next 60 days, we will appreciate greater than the cost of our put. How about that?
Okay.
So we need it to rise 10% to get to break even. So I'm hoping for 15 to 30% return to pay off the 10% put that we paid for today. Okay. So yeah, I think we could do that in 60 days or less.
Good.
Okay, Ryan, let's go ahead and open up. Let's do Mark, and then we'll do Kathleen, and then we'll do Roy. And then we'll go into the bond discussion.
I don't have any questions.
Okay. Mark Bakalish.
Oh, I just had that question about the inner workings of the TLT.
Okay, great. We'll go to that next. Kathleen?
So on the put, if we sell a put, do we have to make sure we have enough cash in our account to?
Correct. So that $30,000 we have earmarked for the SPY, I'm going to designate instead a weekly Friday trade to take advantage of where I think the money's going to flow next. And I do believe we're a few months away from that. So we're just kind of preparing our mentality ahead of time.
Just another reason to follow the rules.
Follow the rules. Yeah, I'll take good care of you and make sure you're not taking on too much. I think the biggest mistake people make is they take on too much risk. It feels great when you win, but it sure feels bad when you lose. Roy, go ahead.
Yeah, okay. Talking about losing. So I just joined on Tuesday, and then following Dean's advice, I moved my accounts around from Fidelity into Mertrade and Interactive Brokers. So all my funds right now are in flux or in transfer, but I have over 125 equities positions. And as soon as I get my hands in a tradable account, I'm going to need to figure out what to do with all of that. So do I get a one-on-one session, or exactly what did I buy with this program?
Yeah, we don't do one-on-one sessions because that'd be illegal. I'd have to be a licensed financial advisor, but in the group session, I certainly can help you. And so, in fact, today with Anwar, I don't know if you saw that video from earlier today.
I was on that, yeah.
We walked him through
Yes.
his $1 million portfolio. So yeah, this is the exact moment for us to give you a consultation for everybody to learn from it. So you don't have to reveal anything you don't want to, but you can tell me like what your exposures are, what your total capital is, and what your goals are, and I can compare it to what I'm recommending. And you saw Anwar, Anwar is just as far off as you could possibly get, which made for a good lesson. So would you like to do that now?
No, not right now. I have a bad connection and I'm on the beach in South Padre Island.
Nice. So, I'd be happy to cover that
right
on
now. I'm not in the right
webinar.
state of mind for that.
Sure, any webinar. But I think some of the advice I gave Anwar is going to play to you with your equity position. So yeah, at any time, and as long as we're in the group format, what I can do is I can look at yours, I can critique it, and then I can compare it to what I'm doing. What I can't do is call you up on the phone and say, yeah, buy the TLT, buddy. I think that you're going to make a ton of money. That would be if I was, we'd have to have a 50-page license that I'm your financial advisor and all kinds of legal crap.
Yeah, I understand. I used to have a 7 back in the 90s, so I understand.
Yep, that's a fun one, huh? And I do have those licenses, by the way, but I just chose that I'd rather take advantage of mass publication, letting people do their own trades versus trying to be a financial advisor.
Understand. There's no money left in that anymore.
Yeah, and look, we got people killing it with 4 ETFs, trading 2 minutes a day. So so you gotta love that. Simplify.
I'm sure I will.
Gary Barber, go ahead.
Well, no, I just heard him say he was at South Padre Island, and I was wondering if he's from the Rio Grande Valley, or is he farther up around Corpus?
No, right now I'm actually living in Galveston.
Oh, okay. Yeah, I'm from
Texas. Came down to South Padre for the.
Oh, okay. I remember the days when they were selling land on Padre Island, $100 an acre.
Wow.
Got lots of Texans.
Yeah, we do, huh? Sure do.
Can't be all bad.
Go Cowboys. All right.
That's right.
Wonder if we'll have a football season. Probably not.
Probably not.
Probably not.
They're still refusing to cancel that Olympics, are they?
They just canceled March Madness.
Oh my God.
And we got another NBA player with it. So that's, 2 of the prime athletes on the planet with coronavirus now.
They're on the same team though.
But they had to quarantine the other teams, and I mean they're looking. He's played like in Toronto and all kinds of places in the last.
Oh boy.
So I don't know which player it was. My wife was telling me about it, but he was being a belligerent idiot, and he was doing a press conference, and at the end of it, he was making fun of coronavirus. At the end of it, he started touching all the microphones.
Yep.
2 days later, he's tested positive for coronavirus.
Oh no!
What a dickhead!
Karma.
He's from France, and he's played here a long time. But yeah, that wasn't his best look ever.
Karma's a bitch.
Yeah.
Them French.
All right, let's look at some yield curves and interest rates and talk about how the hell we're going to pay for a couple $1 trillion of healthcare this year and next. Okay, so let's see, I think we got some questions popping up too. Okay, let's see. Kathleen did the put question. So yeah, I'll be saying, okay, per 30 grand that you have set aside for equities exposure, we're going to sell one of these puts, one of these puts, and one of these puts. And in the worst case, if we go under, we're just going to get filled. And that's how we'll enter our position at a pretty good discount from where it will be when we first enter it. Okay, so Anthony says, if you wanted to scale up your positions from 300 to 7-figure, how would you suggest going forward? No, Mike. So yeah, I would follow the plan. So let's just review the current plan. Currently, our endorsement is to have about half your money in cash, not equities. A lot of people they just can't stand selling for a loss. They don't mind holding a loss, but for whatever it is, they don't want to realize that loss. And so my just big tip is that if we look at the VIX, okay, so if the VIX is high, and it's high, then the house is on fire. So it'd be kind of like buying a house that's on fire and then not having any insurance. So it's probably going to burn down. And so I have very little hope that stocks will go up. You might get a few bounces here and there from people covering their short put positions. You might have central banks trying to sell bonds and gold to prop the stock market for tiny bits and periods of time. But the bottom line is a $30 trillion market cap. If you just get 1% to 2% of that market cap selling at once, it's more money than the central banks can absorb. And it causes more people to start selling. So unfortunately, I do think we're at the tip of the iceberg in the sell-off and have very little hope or recommendation for how to hedge that equity long position right now. So that's just, unfortunately, if you bought a put option, and again, the length of this pullback, I think will be a long time. I don't think stocks, I think we're going to see some of the healthcare stocks rebound before the rest because of handouts from the government. But yeah, you can't protect it with the hedge right now. You had that chance when I was first telling everybody a stock crash because VIX was cheap. Okay, but that chance is gone. So now you're playing with fire. So that's just the bottom line is I don't recommend owning equities right now. Once we get a real spike, once we really see this unfold into America, that's when I want to start selling the insurance on the key companies that I want to own, which are going to be healthcare companies. So we'll be doing a put. We'll be selling a put on the ETF we want to own anyhow on a weekly basis every Friday until we get filled. And then we'll flip over to a married put strategy where we own the asset and we buy a little downside protection. And again, I expect that to be after the VIX goes towards 100, which I think is several months away at the latest. But again, we still have to pull massive resources out of the economy to fund this. So just because I think healthcare stocks may bottom at 100 VIX, that does not mean I think all the other companies are going to be fine and dandy anytime soon. And just because government's going to go bail out oil and airliners and everything else that's getting crushed, they're not, I don't see those companies appreciating. We're just trying to keep them on life support so we don't crush the job market. So who's going to benefit from the crisis? Healthcare, obvious. It's just dead obvious. E-commerce, yeah, but not as much as healthcare. Healthcare's revenues could double, triple, quadruple from this crisis. E-commerce revenues probably just keeps growing and maybe has a little bit of a bump. And everybody else is going to have a pretty rough period of time here. So regardless of how much money you have, My recommendation does not change in any way, shape, or form. So currently, I would have approximately 50% in cash immediately, which means selling your equities. So we were SPY emerging markets. Those are in cash. They've been in cash for quite some time. I know a lot of people just hate to sell for a loss. I don't get that personally, but unfortunately, there's three things I could see solving this. One would be, let's just say this was some evil plot by the pharmaceutical companies, and they designed this bioweapon years ago. They already have the vaccine, and they're waiting for peak panic to roll out this vaccine and save the world. So if you think that's about to happen, maybe you should hold your stocks. 2, government freezes the stock market for 90 to 180 days. I don't know if they could even do that, but if they did, that might stop the losses. I don't think there's a great chance they do that. 3, the US central bank decides to change the laws and start buying ETFs like Japan, like Europe. But the sheer size of our market cap was 32 trillion. It's probably closer to 25 now. But if you look at the balance sheet, we only have 4.5 trillion on the balance sheet. So they couldn't even, if they were to double the entire balance sheet to protect the stock market, you're going to crush the value of the dollar. So I don't know if they're going to go that route either. So outlook for equities is negative, to say the least. 40% position TLT. Okay, we're going to do our bond lesson, but the bottom line is my single highest confident trade alert is to put 40% of your capital into the premier safe haven product. It's really the only one left standing that has any room for appreciation without us going into negative territory. So that product must be protected at all costs for the United States to raise capital to deal with the crisis. If that does not, maybe they let the yield rise so that there's a higher starting point to begin this massive auctioning, but they will need to manipulate that yield. And they just announced they're doing that today to incentivize investment into bonds. So unless they want the $800 billion in it to suddenly sell, which I don't think they want, then they really need to not let it go down at all from here on forward, because we're about to start raising massive amounts of money through the US government. So I like the 40% TLT position. If you want to leg into it week by week, you might reduce volatility, but you might also make less. So I don't think time's on your side for buying the TLT. And we'll look at how high that could go. The GDX position, you're going to enter that with a guaranteed or a maximum loss at the moment of entering that position of 10%. So that's about 12% of my total portfolio. So in the next 60 days, I'm willing to risk 12% of my total capital into GDX, but I'm going to cap my maximum loss at 10%. So in this portion of my portfolio, in the next 2 months, I will lose no less, or rather no more than 1.2% of my total portfolio. Okay, how high could GDX go? If we start doing QE and repo worldwide, it could skyrocket. So I like GDX. Oil's cheap. Cost to mine gold is cheaper by the day. The value of selling gold is going up. So I like that business model, and I like GDX. I don't like the price action we've had. And so that's why we took advantage of the sell-off going double, but then we invested in the put. So again, and when you look at the grand scheme of our portfolio, we can lose no more than 1.2% in 60 days with our GDX position. So I would keep the ratio of your TLT to GDX and your cash the right proportions at all times. Now, how much money you want to invest does not matter. What price you initially paid for does not matter. What matters is risk management. So we've got essentially half our money in cash, half our money in bonds and gold. Gold is protected, the bonds are not. Now, unfortunately, the cost to protect the TLT is really just way too expensive. Those puts are just outrageous. It would eat up all our profits. That's why I did want to see the Fed come in and essentially create the PAL put for the TLT. And that's what we got this morning. So they are starting to essentially, anytime you have a shock on the TLT or that 30-year debt product, they're picking up the tab so that it takes the volatility out and makes it perform the way it's designed to, which is to be the safe haven asset for banks. So with that said, that's it. Doesn't matter how much money you have. Keep your cash, bond, gold ratios as allocated, follow the system, and I think you'll be very happy. Now, if you're the type of person that really hates volatility, then layer into it week by week, spread it out over a month. But I don't think time's on your side. I think the crisis will be far worse in a month than it is today. If you go look at Italy, we're perhaps 4 weeks behind what's happening to Italy. Keep a close eye on China. They're trying to say everything's hunky-dory and going back to work. I bet the virus starts spreading again the second they go back to work. And they're going to be in and out of having to go into quarantines and letting people out to keep their economy surviving. But this is going to be negative GDP worldwide for the foreseeable future. So rates are going to go super low. Does that answer your question? Okay, Anthony has, our TLT calls are based on the cash position. Correct. So, okay, let me read the question out so everybody can hear that. Our TLT calls are based on the cash position since that is purchased with the SPY cash, which would reduce our 40% cash position and not be part of our TLT position. So good point. And today's trade alert could be confusing. So let me show you the difference. So in the Monday, Wednesday, Friday program, which we have, that's their way of bringing in new clients. So new clients are coming in with a pretty basic mentality about markets. They have very little patience to show results. Hey, Anwar's back in. Hey, Anwar. No problem. I'll cover that next. So Monday, Wednesday, Friday is what we give out for a week for free to build trust and bring in new clientele. So you're going to see that on the Monday, Wednesday, Friday trades, I'm more inclined to do shorter term trades with less risk. So you've seen I've been putting out relatively near the money call options with a short time frame. Jose says, what's the maximum price? Okay, I'll get to that in a second. That's a good question too, Jose. Okay, so Monday, Wednesday, Friday, because I believe the SPY will continue to tank, I just don't want to mess with fire. We've been handing out TLT and GLD call options with short durations of around about a month. Today, I issued a trade alert that's not part of the Monday, Wednesday, Friday program. And that's because people who do join our pro program, they're committed to us and they're not so short-sighted. So while we've been loading up on TLT call options relative to our cash position, which like you said, has reduced that total cash value, we're going to be selling those in the near future to free up that capital. So you will have that cash back well before we need to start buying stocks. So that's one. Two, today's trade alert was January 15, 2021. That's 300 days out. And so again, my intention is to sell this in 180 days. So half the time premium will be left. And I want to get twice as far as my strike. So I expect that we should be above 180 within 180 days. And that's when I intend to sell that TLT call option. So this trade alert was only for pro members on our Thursday program, and it's relative to your total account size. This was a very aggressive bet, and I would get it at any price, Jose, to be clear. Again, I don't think time's on our side. I think TLT must travel higher so that the government can fund the fiscal spending it must do to get through this crisis. what's important is only one per. So look, we're predicting this will go to 180 and we're currently at 159. So you're getting in at a great price. So to reiterate, if I am doing a big trade like this, I want to sell it with half my time premium left, and I want to go twice the distance from the strike. So the distance from the strike is $10. So I want to, I'm aiming for it to breach 180 in 180 days, and that will be the time to sell that. And that'll be a massive return if that plays out. Also, what's critical about this trade is really the doomsday scenario is if they cannot keep the TLT protected, the 30-year treasury. This would give us enough exposure to get a great return and to dump this 40% TLT position if it just was not behaving as it should. So that would probably be risk parity funds going bankrupt and a much bigger crisis than I'm expecting in the short term. So is that clear for the call options on the TLT we have out? Anwar, yes, so we have no emerging market position right now. That's in cash. We have a put option, but I wouldn't buy that today because it's already up 1,000%. And that was, let's just see where we're at on that one.
Okay.
Yeah, so most of, half our money's in cash. Our gold position's protected with the married put. Our biggest risk right now is the naked 40% TLT ETF position. So this was returned this morning. I haven't checked where it's at currently, but we bought this for 80 cents. And now this morning at least is worth 8.85. So that trade is, it's gone up considerably. Okay, let's look at, go
I
ahead.
have a question, Gary.
Yeah, I have a quick question, and that is about today's TLT call. If I interpreted the alert correctly, if I have 150,000, I'm in the pro program, I would buy one call or 1.5 calls or two.
I'd do one.
Well, I've done two. So I just wanted to make sure.
Okay, well then just realize you're taking a little extra risk than I am.
I understand.
Which is not the end of the world, but yeah, I'd always round down versus up in that predicament.
Okay. All right, thanks. And now is this segment going to be recorded? I mean, can I?
Yes, sir.
Okay, great. Thank you.
We'll send out the replay shortly after.
Thank you.
When you say one call means 100 shares or what?
One call option was, so here's how we have our portfolio allocated. For every $100,000, we bought one January 15, 2021, $170 call option.
Where's my phone?
Okay, so that was a pretty large investment.
That will cost about $6,000 or something.
Yeah, it's expensive. We have half our money in cash. We have 40% in TLT ETF. And then we have, it's about 12% total in GDX. So some of this cash, to be clear, is actually in call options and put options. So that's, I haven't summarized what our total cost basis was for all our calls and puts, but we are using that cash position to get in and out of our option trades. So it's pretty simple. Right now you have a lot of cash. You have a handful of TLT call options. You have 2 GLD call options. You have 40% in the TLT, and you have a married put on GDX. You have twice as many shares of GDX as you have TLT. I'll try to make a little chart to send out with the Bootcamp replay that summarizes it, but Now, I'm not recommending you go back in time and take old trades. So because there are new people coming in, you guys will all potentially have different call options and put options open relative to other members.
But the ones that we've written down that are in better positions cost wise, you still recommend not picking those up?
Because yeah, so Mark sold on Monday for a huge profit. Now doesn't have the same exposure I do. So yeah, I mean, I guess that would be just kind of rebuilding what we currently recommend. So I don't think that's a bad idea.
Okay, great, thank you.
Jason, when was the GDX position? Is that today's trade alert?
Yeah, so we increased GDX. So we had a 1-to-1 ratio of TLT to GDX.
Right.
And now we have a 2-to-1, but the catch to that is we bought the put.
Okay.
So we
All right.
basically took a 10% loss for the next 60 days on that GDX position. So it's about 1.2% portfolio loss when we enter the position. And the bet is that GDX will appreciate by greater than 10% in the next 60 days. And that's how we get our profit.
Okay.
Can I ask what was the price on the put?
Sure. Yeah, it was 23. $232 relative to $2,300 risked.
Okay. And two months from now, eh?
Yeah. So here's what I do for my accounting is I use the ask price if I'm buying and the bid price if I'm selling. So no, I'm not trying to pretend I get the mid. Hopefully you guys get the mid so you have slightly better results. And so this is what we base all the accounting on, is this screenshot right here. All right, who wants to dream about how much money we can make on the TLT and look at some yields? All right, so here's TLT. And this is just such an obscure asset to most investors. Most people come to this program, they know a lot about technical analysis, they may know a lot about options trading, and they know a lot about stocks. Most people are a little shy on the fundamental analysis and the bond market in general, which plays a very important role in our strategy overall. Yeah, that TLT is just being a little bit of a bugger today, isn't it? Gave us a run up and pulling back a little bit. Okay, so let me close some of these other.
I have a question when you have time.
Oh, go ahead, Murray.
My eyes are off today, and I bought the 175 instead of the 170 call on the TLT. Should I close that out and open the correct price?
You got the 170 instead of the 175?
I got 175. I thought you said it was 170.
Yeah, I like the 170 based on us getting back to the all-time high. So the all-time high was 180.
Okay. So in my case, I can close out the 175 with a loss and buy the 170.
Yeah.
Okay.
Yeah, so I picked the 170 because I believe we can get to
it was strictly a visual error.
No worries. We'll. Okay, so let's take a look at how interest rate change affects the price of the TLT. Okay, and let me pull up the federal funds rate. Okay, so here's your historical chart of the federal funds rate. The bond market reacts to the federal fund rate. And in fact, it usually is trying to predict what the federal funds rate will be in the future before that decision has been made. And so what I've been really noticing is that the 2-year Treasury has done a good job at being a leading indicator of what happens next for the federal funds rate, as well as looking at what the 30-year German bond is. And that's because until now, the big slowdown has been based from China. And so Germany is really connected to the hip for its exports with China. So if we look at what the German yield was doing, that gave us a pretty good idea of where the US yield was headed. Now that dynamic may be changing because I think the country that's going to be the most impacted by this, unfortunately, is the United States. So let's just look at some of the moves we've seen this year and what impact that had on the TLT. You guys can get an idea of how to play around with this in your head. So if we go to February 3rd, zoom in on this. Let's just look at the move we've had so far this year. So we started on January at 137 TLT, and currently we're at 157. So let me okay, so from the start of the year, remember, we're supposed to be rising yields and slow growth this year. What a joke. Who would have guessed? Okay, so as of currently, from the start of the year to current, we are at about a 14% return on the TLT. Now we've had as high as 32%, but right now we're at 14.7. So what happened to yields to do that? And I'll get the ROI calculator. We can calculate the change in interest rate percentage basis. Okay, so the fundamental analysis is that if your economy is having trouble, the go-to action is to cut interest rates, try to get more borrowing to happen and to fix your underlying economy. Okay, but we're seeing them cut rates and do QE. So their rate cuts end up making bonds go up, but it's designed to help the stock market. QE is designed to support the bond market, but its result is it tends to make things like gold and equities go up. Okay, so they're starting to have trouble in both. That's why the Fed came out and said they're going to start buying treasuries at all measures of the curve. So that's essentially the Fed saying that we're going to protect your treasury positions because we need to borrow a lot of money. So to incentivize bond investment, we want yields to go lower. That's what makes the TLT go up. So let's just look at where we started the year, 2.33. And where we're at today. $1.3. Okay, so we had a 44% drop in the interest rates, or 100 basis points, 100 basis point move. And that drove the TLT up 15%. Now let's see where it was at the peak on March 9th. If we go back to March 9th, we were as low as 0.99. So that was a 133 basis point move, peaked the top of the TLT range, or a decrease in rates by 57%. Okay, so what do I think happens next? Well, My expectation is that the 2-year is going to travel significantly lower, probably to 0 in short order, which is currently at 50 basis points, and that this will be dragged alongside with it. Now let's just pull up a few other months so we can see what's. So here's your yield curve starting in January, then February, where we went inverted. Okay, then we did an emergency rate cut, drove this way down, so it's not inverted any longer. What do I expect next? Well, I think this will be dragged to 0 and that this is going to start falling. So perhaps we go from 1.3 currently down to, a lot of people want to say it won't go lower than 0.5. So if we were to go from 1.3 to 0.5, which I think is very likely, then we're probably picking up 30% from current prices, or about half of that percent change. So if we go back to current prices, if we were at 156, and we're going to pick up a 30% return, that gets us to 202. So that's kind of just the basic concept here, is that we do expect that they have to drop rates to 0 very quickly, that they're going to do quantitative easing at the same time, which is unheard of, to force this yield down so that investors in treasuries are rewarded. We need to raise a lot of money right now. So there's 2 options. Either you let the yield get so attractive that people will just buy and hold that debt for the entire duration, which would be unattainable for the taxpayer in the long term, so unlikely. Or instead, we simply force interest rates lower through the federal funds rate. Now look, what do they do in every stock crash? They cut those rates big time. Okay, so if you think there's a stock crash, you can expect rate cuts. Well, we pretty obviously have a stock crash, and we already have rate cuts. So my expectation, this goes to 0. Unfortunately, I think it may go to negative rates. So that's how you suddenly get to a very bizarre world where the German bond, for example, got to, I believe, as low as 50 basis points negative on the 30-year. So that's how you all of a sudden end up at a 300 TLT. But if we just stay above, a lot of bond experts do believe that if this were to not stay positive, it would break the entire financial system globally. So let's just say we go to 50 basis points. Well, we're looking at a 200 TLT ahead. And so if the government needs to borrow trillions of dollars and it doesn't want everybody to freak out and sell their bonds, what do they have to forward guide? They have to give us a guidance that not only will they cut interest rates to drive appreciation into the asset, that they will also be willing to buy those bonds, so there's no risk of everyone selling them and spiking the yield. So I believe we will see the Fed vacuuming up all the shock in the TLT as they cut interest rates and expand repo. So the repo is what allows investors to buy these bonds up, hand them to the Fed, and have cash so that they can sit and wait for the bonds to appreciate. And so right now, so why is the TLT going down right now? So this is what I want everybody to be aware of. We're probably about to go limit down on the stocks again. Whew. So what's happening to people who are leveraging into stocks? They're losing a fortune. What's happening to people who are exposed to oil? They're losing a fortune. So right now, the biggest risk to the TLT are people who are going bankrupt and they're just liquidating everything, absolutely everything under the sun. So once again, I think we have to have a bigger view that the Fed will protect its bond market because it needs to raise capital to finance the healthcare industry. So there we go. We're down 8%, 8.5% on the SPY today. And we've been screaming and hollering to get out of Dodge for quite some time. So unfortunately, I think, let's see where VIX is at now. Does that make sense how get a rough idea of what's going on? Wow, 72. We're going to be at 100 in no time. 100 is when I'm going to start wanting to start selling some puts on those healthcare ETFs out of the money. And once we see the volatility getting crushed back down, that's when I'll be willing to switch to the married put strategy. So our cash could be put to use sooner than we expect.
We could be there tomorrow.
Yeah, but I do want to caution, just because we get to 100 VIX does not mean your Alibaba, Microsoft positions are going to go back up. We got to realize where do we need to allocate resources to solve the underlying crisis? And I'd argue that's your healthcare, biotech, medical device companies. They need the resources to solve the problem that America faces and all these other countries. So yeah, just the money has to be vacuumed into the US Treasury market. It has to be incentivized for investors to make that investment and hold. So we're going to have to get a lot of forward guidance. And that's what the Fed came out with. The only reason I believe we have a little drawdown on TLT is probably more blowouts, probably more people getting blown out and just liquidating everything.
But
So,
don't you think some of those equity positions in Baba and Amazon, with everybody staying at home and pumping money into those corporations,
yeah, I
sooner
like
or later that's got to
I
pop.
like e-commerce, but e-commerce, sure, you're going to have at least, you know, you're going to have a quick rush to buy. So here's my problem with e-commerce. Amazon's not going to sell shit if China's going to block the supply chain.
Right.
So that's a big problem. The bailout from the government is going to go to healthcare, not to e-commerce. So yeah, I like e-commerce, but that might be stage 2. So I think stage 1 is we're going to get a huge jump in the 3 healthcare ETFs we looked at, because they're just going to, if I'm right, we're going to have people plopping over dead everywhere in the next 2 to 4 weeks. And Congress is going to start writing massive spending bills to fund what needs to be done. So the resources have to be allocated to the government through the bond market. That's step 1. Step 2, how are those resources allocated? Well, we got to save humanity here. So it has to go to the healthcare, biotech, medical device industries. And it's just really as simple as that. Now, how do you make money flow to bonds? You have to cut rates and do QE on the important parts of the curve, so that you basically force that investment to be profitable for the risk takers. And so the central bank, we don't need the whole crowd to like this trade. The central banks are going to force this trade. They can force it with their 2 tools, their 2 very blunt tools, which was 1, look what we do in crashes, guys. We cut rates. If you cut rates, that makes your yield go down. If the yield goes down, TLT goes up. So that part, pretty simple to understand. Now we're seeing some volatility. They're cutting rates. What the heck? I get it. Okay. Oil is at levels that are putting people out of business. People who are overexposed to equities are getting destroyed. So we're getting just massive liquidations. So I'm keeping a close eye on it. What's the devil's advocate to why the Fed would let the 30-year go up a little bit? Okay, well, let's play that devil's advocate. Let's say that it wasn't just parity funds blowing up, and it wasn't just oil derivative traders, people selling puts and things of that nature. Let's say it's not just that's putting pressure on the 30-year. Let's say the Fed actually wanted to let that 30-year sell off a little bit. So the only argument I can come up with is that they simply want to start from a higher price point, higher yield. So there's more room to bring it back down, more money to be made for people who invest in this. The cost of that is there's $800 billion that might potentially run for the hills if that yield goes up very much at all. So I understand that. And that was the purpose of our trade alert today. So let's look at that trade alert today and think about how this could play out. So if we don't get the TLT behaving nicely, which it started to today with the Fed's announcement, I would bet there's people, we got 8.5% down on the SPY today, 250. I mean, people are just run for the hills. So the point of this trade today, which was a large investment, was to give us the exposure for our fundamental analysis, but allow us to, if it's not behaving, we can sell that 40% TLT position and then rebuy once we think they have finished letting the sell-off do its work. So if we thought for some reason that the banks wanted to let the yield rise so that they could start the rate cuts and the profit potential on this trade from a higher level, then we can get out and still leave this open and have a lot of time on our side. We have 6 months for the central bank to allow that yield to do whatever it is they're going to do and then start rocketing it up, which they need to do to incentivize investment. So right now that TLT is $800 billion asset class. That's going to have to expand dramatically. Yeah, so we're seeing the same thing as yesterday into the close, just massive liquidations. This is nuts. So we got GDX at 2260, but remember, you guys own the 23 put, so you're losing nothing. Your put option's going up and protecting your GDX. The TLT, we don't have the proper downside protection because it's too expensive. So once again, if this doesn't start behaving as it should, we will just get out of the way and leave our call options for that exposure we want. SPY is just crashing. VIX is at, what's the VIX at now? VIX is at 72. So we got a complete meltdown happening on the stock market right now, as well as the oil market. So I'm still not worried about TLT. If I do get worried, we will issue a sell alert for that ETF and leave our call options long. But in the grand scheme of things, we really need the Treasury to slowly appreciate to fund the government to deal with this crisis. And there's just no way around it.
Listen, real quick. Apologies, I had to log out there for a second, so maybe I missed it, but I'll go back to today's webinar online and hear it. When do you expect GDX to come back?
So the strategy on the GDX is we're making a bet that within 60 days, GDX will appreciate more than the cost of our put. So when I entered this trade, we're at 22.81. I bought a in the money put option. So that gives me the right to cash out at 23 per share. And just to simplify the thinking, that doesn't mean I'm ever going to exit my underlying ETF. That just means this is giving me a relative payout at 23. No matter how low GDX goes, because I have one put option per 100 shares, that's the price tag I get. So GDX could crash 50% and all I lose is my put option protection. So my bet is that within 60 days, GDX will travel greater than the cost of the put. So that's $2.32. We're starting at 22.81. So that's about a $2.10 to break even. So we have to get to 25.10 to break even. After that, we go into the money and start making profits. So what's the reason to be long gold miners? Well, number one, oil's cheap, which makes mining gold cheaper. Okay, it costs these guys about $7.50 per ounce to mine, and they're selling it at $1,600 approximately. So I like that as a business model. Next question is, will gold stay elevated for a long period of time? I believe yes. I believe we're going to see central banks do rate cuts and QE at the same time. Now, everybody loves to point out that gold went down in the 08 crash and went up in 2019. But remember, that wasn't reacting to stocks. Stock market crashes cause the Fed to take certain actions. And so right now, the Fed's doing two things. They're cutting rates and they're doing QE. So if you think there's QE, that is going to debase the currency and make the relative value of gold go up. So that's the fundamental analysis of why we want to make this bet all day, as long as we believe quantitative easing. ECB came out, they're at a negative 50 basis point rate. They're leaving that flat, probably to let us catch up to it first, but they did announce some QE. So right now, I think you guys are going to have to just understand that people are going bankrupt and they're selling everything to get out of extremely negative positions. Primarily, those negative positions will be having sold put options on stocks and on oil future contracts, also loaning money to small and medium-sized oil companies. Everybody in those 2-3 camps is suffering massive losses right now. So they're forced to exit those positions by selling their other parts of their portfolio. And that's why yesterday we saw everything sell off. That does not happen normally. Hey, Karen, how's it going? So, hey there. I don't know exactly when it'll turn around, Jose, but I believe in a 60-day period, I'm willing to risk 12% of my total capital in this position with no more than a 10% loss. So with this trade, I can lose in 60 days no more than 1.2% of my account. How much do I stand to gain? Well, we've seen what happens to GDX in a bull market when there's quantitative easing. It potentially goes up towards 60. So potential return over the course of several years of being long GDX during a period of QE is several 100% gain. Our intentions buying it during a sell-off, during a panic right now, I want to have the married put until I start seeing it behave correctly and I start getting more evidence that there's going to be massive QE, which I think there will be. How's it going, Karen? What's new?
Not having a very good day, but that's another story. I'm just totally confused about the TLT, but I'm sure you went over it, so I'll have to listen to the replay, but it's, I don't get it.
It's okay. Let me just review that. So
here's another thing. I don't trust it. And I'll tell you why, because, my feeling, I'm concerned because I understand that these, there's certain parameters. These guys set up these contracts the way they do in order to structure whatever these programs, whatever they got these, because this is, what is this, an ETN or is an ETF? I'm not even sure. But you know what? Doesn't mean they can't change something during stressful times. That's what makes me nervous. Oh, it's ETF. Yeah. But who's to say that all of a sudden they change something and here we are structuring ourselves a certain way and bam, so I'm a little, I'm not a happy camper today. What can I tell you?
Well, totally
so I was about to make a comment on the TLT. I read an article yesterday and I forwarded that to Jason. He saw it too. It looks like they're right on schedule. The the afternoon margin calls are causing people to liquidate, and I
Yeah.
think that's what is causing the afternoon sell-offs on the TLT.
Yeah, the 230, right, sure. That's
So
what
the, so the Fed
did.
came out and said they're gonna buy the long end of the treasury. That's your put.
Oh, okay. Well, see, this is what I'm trying, right. So I was in the car, I was listening to some of this and I heard them talking about how they're the overnight repo market doing whatever, another 500 million, blah, blah, blah. It's going to equal 1.5 trillion. I'm going, what? So I'm thinking, oh, great. How is this? But this is the TLT, not the short-term stuff. So I'm thinking now, so, you're the bond expert. I'm not, but something, a red flag goes off and I'm like, doggone it. I should have listened to myself and just pulled the doggone things off, waited for everything to go cuckoo and gotten back in at a lower price. That's me. I understand it's not your profile, but I'm thinking I'm an idiot. All right. That was me. It's still my money and my account. And I should have listened to some of the stuff and then gone back and listened to the rest of I'm sorry. I'm not having a good day. So I'm frustrated.
Sure.
Because
So yeah, I'm sure we all
trying to
wish we had sold
because
on
I'm trying to
Mondays some
offset
of
all
it.
the crap in another account that I can't touch, and I'm sunk right
So
now.
the real pains in the equities you're still holding, right?
Yeah. Well, yeah. I mean, there's things I can't. It has nothing to do with the ones I'm working on and the accounts I'm working. It's all the other stuff that I can't touch. Because it's sitting inside of either his 401k or when this other managed stuff that I'm already complaining about. That I said, told you. And I was
Okay, let's talk about the benefits of TLT having trouble in the short term.
Okay.
So number one, we have a pretty long-term view of where TLT is going.
Yeah.
Okay. So
Yeah, and that's the other thing. By the time I was sitting there trying to put on that,
let's look big picture, then hopefully feel a little better.
on yet because I was not in a position to go in and do it. So I'm freaked out about that now too.
All right,
Okay.
so let's look at this. What does the Fed do during the last 3 stock crashes? The gray bar is the stock crash.
What does the Fed do? QE?
Yeah. No. So this is a federal funds rate.
Oh, sorry. What am I
Okay.
looking at?
So blue line's the federal funds rate. That's the interest rate at the highest level.
Yeah.
So,
Okay.
So they lower the interest rates during stock crashes. Okay. So ask yourself, do you feel like you're in a stock crash?
Am I in a stock crash? I'm in an everything crash is how I feel.
Let's just rephrase this. Do you think the stock market is crashing?
Yes.
Okay. So that's a yes. All right. So step one, do we have a problem with the private sector? Yes. Obviously, yes. That's a yes.
That's a big yes.
That's a big fucking yes. Okay. Step two. What does the Fed do in the last 3 stock crashes?
Well, what? You mean what, on the one you're
interest.
showing me? What, during the stock, lower the rates?
Yeah, they lowered the rates a lot, didn't they?
I know, but we're already low. This is the whole point. This is what I'm trying to figure out. Where are we going? They're not going to go negative.
Well, we're not anywhere near negative yet.
No.
Okay, so we're not even at 0 yet. So
no.
Okay, so who wants to bet what the Fed will do next? Who thinks they're going to cut rates to 0 in short order?
Oh, I do.
Okay, so if you believe that they're going to cut rates to 0, and
or
they
at
just
least to 0.5 or something. I mean, it's going to get to whatever they're going to do.
They're going to cut rates, right?
Right.
Okay, that's 1. 2, they told us today that they're going to start buying all of the treasury, not just the front. So why are they doing that? Well, they don't want the yields to rise. Why? Well, they need to raise a lot of money. So we're in a bond problem and a stock problem.
Right.
But they need, so if the yield rises, there's $800 billion of money that's going to sell. Okay, everybody bought the bonds on the 30-year today and in the last year. They don't care about, nobody wants to make this yield right here. I mean, what a joke. Who wants to make 2% to, if you believe inflation will be below 2.3 for much longer, for 30 years, with this amount of money. Yeah, right. So everybody bought this because they want to sell the bond during a period of QE for a profit. So the Fed has come in and they told us they're going to start vacuuming up any shocks on the yield curve. Okay, so they just came in and told us that today. So that's critical to fund the government. The government needs to borrow more money now than they ever have in history. So I'll tell you what's going to happen. This rate is going to go lower. It has to. If it doesn't, we have Mad Max total Armageddon in short order. Okay, so stock crash. All right, that's causing
Go back
people.
to that other chart, because just the other day, that's what happened. Look at it, March the 9th. You got 99 cents there. That was the big, whatever day that was.
Yeah, but I'd argue this will be at 50 cents soon.
Okay. Fair enough.
Okay, so big picture is stock market and oil markets crashing. People are having to liquidate. So who loses money in a stock crash and in an oil crash? That would cause them to sell their treasuries. Why are they selling their treasuries? Treasuries aren't getting destroyed. There's no massive losses in the treasury. Why are they selling their treasuries? Why are they selling their gold? Wait, if we're in a stock crash.
You talking about like Saudi Arabia, who uses their oil in order to pay their, it's a sovereign government. That's how they fund themselves.
Well, let me just walk you through the thinking here. Okay, so we all know what the Fed does when there's a stock market crash. They cut rates. That makes bonds go up. Okay, so we got to ask ourselves, well, stocks are crashing. Why in the hell isn't the TLT flying up? What would cause me to want to sell my treasuries, which I should believe, if I'm a level-headed investor, I should believe that I could count on those treasuries in a crazy time like this to make money. So why would I sell my treasuries if the pain is over here in the stock market and in the oil market? So who would potentially actually be forced to sell their treasuries? The one good asset they have in their books. Well,
over leveraged funds, right?
Yeah. So if you just own the stock, you could sell it. So like Anwar's sitting there watching his 25% loss turn into a 30% loss. Well, that's fine. He could sell for 30% loss and he's in cash. He's not going to go sell the things that are performing. No, the person who has to sell his treasuries today, he doesn't have a 30% loss. He has a loss that's greater than 100%. So the only way you end up in a position where you have a loss greater than 100% is when you start underwriting put options on these assets. So if you're selling puts on the stock market, because you think
crazy, first of all.
Yeah,
that's the banks. The banks are the big sellers of the puts. They'll take the other side of every transaction, right?
Yeah. So the people selling puts in the oil market and the stock market are definitely not just losing 10, 20, 30%. They're losing 100, 200, 300, in fact, every dollar it goes below, all of a sudden it's 200, 300, 400, 500% loss. Okay. So now we can understand why this sort of move could catch people off guard and cause them to liquidate everything in their whole account because they're bankrupt. Okay. So we're having bankruptcies. That's the noise we have to see through to make a good judgment on what to be doing with our portfolio today. So,
but Jason, this isn't just people. This is banks have but don't banks have divisions that underwrite options? They'll write any option that anyone wants to buy. Why? Because 70% of options expire worthless. So they collect the premium, and most expire worthless, and the few they have to pay off are less than the 70% that expire. So it's a cash cow for them, except in situations like this, then it puts them upside down in a damn hurry.
Yeah.
Right?
Yeah. Okay, so let's talk about what's the blessing in disguise that our TLT is not rocketing up right this second. All right, so if we have a bunch of big banks who made foolish put option selling strategies that aren't just losing money, they're multiple 100% into losses. Okay, well, who's going to bail this crap out? Well, that's why the Fed came in today and said, we're going to bail out the treasury market. We're going to take out all the shock. And that's essentially QE. So if we see the TLT having a little trouble because we're having big players go bankrupt, what's the chain reaction? Well, first, Fed's going to have to buy up treasuries. That's going to expand its balance sheet. What trade do we have on that benefits from balance sheet expansion? If we have $100 and there's 1 ounce of gold in the whole world, maybe we say that ounce of gold's worth $100. But suddenly, little Johnny, we're playing Monopoly, goes and sneaks another 100 out of the bank, puts it on the table. Well, now there's $200 on the table. What's that same bar of gold worth? Probably twice as much, right? So if we have a bunch of people going bankrupt, liquidating everything, and the Fed refuses to allow the treasury market to collapse, we can count on that balance sheet expansion. That's very good for gold. So if you look through the noise, there's 2 big predictions here. Number 1 is this crisis is going to create a stock crash. We already see that playing out. That's going to cause the Fed to cut rates. That artificially drives bonds up. Okay, so that's why we want to own the TLT. We normally wouldn't want to own gold right now, not during rate cuts. That's not going to make gold go up. What makes gold go up is balance sheet. Pull up the St. Louis. We want to own gold. We want to see a move like this. So right here, when they announced this in late 2008, that they're going to start buying trillions of assets, that's where you get your gold silver rally. Okay, so they usually like to do one and then the other. But this crisis is of such a magnitude that they're doing both at the same time. So money's just going to be ripped out of the stock market, fueled into the government through treasury sales, and then I believe it'll be handed right into the healthcare sector. So you want to own bonds, you want to own gold, and you want to do it with smart risk management. And sure, we're going to have some blowups. People are going to start oh, wow, we broke 250, 248. Yep. We're going to hit a trigger on the stock market, I bet.
13%.
Oh, we only got a minute. Yeesh. So who's still holding stocks? That's what I want to know.
Oh, yeah. Well, in our mutual funds on the 401ks.
You can't put that into cash?
No, sir.
There's no option?
Nope. 0.
Oh, God.
And I can only move it once every 30 days, but I did not realize that because it's hidden inside all kinds of little teeny print someplace. They don't even say that. Until you try to change something, they restrict you and it comes up saying, oh, I can't do this for 30 days. I'm like, really? Where is it in the plan that it even says that? I mean, I went looking through it, forget it. It's ridiculous. So no, and then concerning these items, oh boy. I just got my hand slapped by the Fidelity planner. Please email oh, is that funny? Well, can't communicate on my, no kidding.
Edward, you sell that Microsoft Alibaba yet, or are you still holding on for dear life?
I sold 500 of Microsoft, but not all. I still own some. Okay. You're telling me to sell? Is that what the lady was saying?
I've been telling everybody to sell for a long time. I think it's been pretty clear.
Yeah. Yeah, that's why on the 22nd of February, I tried to, I couldn't sell anything. I was trying to reposition, but I could only do just so much.
I was basically telling everybody to get out on February, but we were playing it in a way where we could catch a bounce. We missed the bounce.
Right. And that's what I was doing. And I figured I'd readjust it again if anything changed. And that's it. I mean, I'm not kidding. If I were to show you what in the world were his options, I mean, you don't even want to know. It's so doggone frustrating. I mean, I can't, I almost felt like not even bothering to contribute anything at all. But then there's this challenge. He's employed. In order to get tax deferred to that degree, you have to contribute to the 401k. Otherwise, of course, when it has a crash like this, who knows it's going to do this, but once every, 10, 12 years, right? To this degree, you
Who's
take
your
the risk.
401k with?
Oh, he works for a car company. Okay. So they then go into NADA. It's NADA's general 401k that they use, and it's NADART it's NADART.
Okay.
And they're awful. But then again, regardless of what company it is, it's not necessarily. I don't know if they would offer more. I think they probably do. It's always up to the individual owner of these dealerships, and he happens to work for the largest privately held group in the country. Okay, but they don't. Oh, I'm sorry. I'm just so doggone frustrated. I'm like, it's up to them if they want to pay the price for getting a lot of options for their employees. And I'm going to tell you, when you're in the damn car industry, they think they're a bunch of idiots. And you know what? A lot of them are. And so they think they don't know anything, and they're just going to go into some type of a dated thing, or they're not even going to contribute at all. So that's why they don't do a lot of choices. But then you get somebody who's a manager like my husband, who's got a wife like me, who wants to be a little bit more, conscientious about this. And we don't have choices. But then, you're stuck, because if you want to have reduce your taxable income, you have to do it this way. It's the only way you can contribute enough to make a dent. So believe me, I've been round and round for years with my accountant, and I wish we could do this. And it's awful. And then this crap happens. And then we get, to a point, my husband's like, well, can I retire in 5 years? I go, well, you may not even have a job in 2 years. So just hang on, yeah, because he happens to work for a Nissan dealership, and, they're in trouble. They were in trouble before all this crap happened. So yeah, I'm sorry. You don't need to hear my woes right now. I'm just not in a good mood.
Hey, Karen.
Yes, sir.
I have a similar thing. It's not car dealerships, but it's union programs. And I have a similar situation. I came up with an idea, though I haven't done it.
Okay.
And that's, they offer the option of borrowing half your money and you pay yourself the interest. If you follow what I'm saying.
Yeah. Yeah, I'm trying to remember if they even permit some of that. Look, these guys, I'd have to check on that. At this point, it may not even matter.
Well, if it's headed down another 50 or 75%, like Jason's speculating.
Yeah, then it is. Okay.
Then it might be an idea.
Gotcha. That is an interesting point. I will look into that. Thank you.
You're welcome.
All right, guys. Well, I think that's a pretty good overview of what I think is going to happen here. As soon as all the meltdowns stop having to liquidate everything, I think we're going to see some pretty magnificent pushes in the TLT. And the more money they print, the faster our gold goes up. So the equity opportunity I really like is, again, healthcare, bio, and medical equipment, which I think is going to be the top rewarded industry from what's unfolding. I do like e-commerce, but I don't think it will appreciate nearly as much as our healthcare sector. Any last questions?
Yeah, I did actually. As I've been trying to, get taxes together and all this other nonsense, I meant to ask in my question that I sent today, are you still on track? Because I have not been. I just can't seem to catch up with myself with the what we were learning about with interactive brokers and the all that currency trade, or are you just kind of taking a pause on all that stuff for right now because of all this?
Okay, so then we get into conspiracy theory. So here's my conspiracy. I think we will be at war with China, Russia, and their allies.
Yeah.
That we lost the first battle.
Yeah.
And this was an attack. So
Yeah.
I didn't see China having a one-up on us, but this was a beautiful attack. It worked. It's going to take us quite some time to recover.
Yeah.
So I think step one is we have to take the impact, which is going to be brutal. And then we reorganize and go on the offensive. So that's when I would want to start betting against China more aggressively than we currently are. So
Okay, so we have time. In other words, we have time for that, so I can focus on other things that I need to besides trying to set that up because we got time. Is that what you're saying?
Yeah, so I think we have to first take the impact of the attack, which is devastating.
Yeah.
And then I think we'll see America go on the offensive. Timing,
How are we going to do that? How are we going to do that?
So I think first we have to raise a lot of money through the bond market and push this into the private sector, get this disease under control, probably develop some vaccines. Obviously, it's a race against time for humanity in that respect.
Mm-hmm.
Okay, then here's how you just blow China out of the fucking water. You hike interest rates, and that will implode their currency.
Okay.
So I think soon as we do get things under control, we're going to start sanctioning. I think we're going to see the United States put all the blame on China. One, two, I think they'll start sanctioning aggressively different parts of China and pushing all our manufacturing back home. And then three, we'll start outlying investments into Chinese products like ETFs. So that'll be at risk. And then four, the real blow to their currency, which is really their weakest point, would be raising interest rates. So, but we can't do that until we take care of our home first.
I was going to say, because raising interest, I mean, I feel like we're fighting four enemies.
I think we have traders here in the States. Clearly,
that's one.
Clearly.
That's exactly what I'm talking about. I mean,
first we have to win the battle internally and take care of this blow, which could take probably 2 years. But probably we'll start seeing some more offense. We'll have to keep a close eye on Trump's dialogue about this.
Yeah.
I could see Trump running on free health. Funny enough, we're going to see Trump running on Bernie's healthcare package, except the money goes to private sector and not just centralized at the
Karen,
government.
do you have a taxable account you use?
I'm not for this type of trading.
No, outside of your 401k, do you trade?
I don't trade outside of my Roth and my IRA at the moment. I have another account. I've got a couple things. One's managed, through Fidelity because I lose my access to this one guy that has been helpful in some projections. So I haven't touched that one, and I should have, I've got a few other little accounts here and there, all these different places of employment over the years or start and stop, bankruptcies through my employer, got stuff taken away. My husband getting, I've got so many little things. They're split up, a lot of them. I tried to consolidate a few of them. So yeah, I've got some it's the taxable stuff that I is losing, and I just should have taken the tax hit and gone to, told them that I wanted to do it too. I just wanted to go to cash or go to, something more secure and just take the tax hit for the year and the heck with it. Because I just had a feeling this was going to happen. And of course I got encouraged not to, and here we are. Why do you ask? What are you thinking?
I had a similar situation and I'm agreeing with Jason that we were going to see this correction. So I went ahead and hedged everything.
Yeah.
Basically.
Yeah, you could though. Yeah.
What?
Yeah, but you could. I didn't take any additional. I mean, thankfully, I was smart enough to keep cash on the sidelines,
Yeah.
But,
that's cool.
But I'm also juggling a couple of places because I'm back and forth between 2 states because I got this elderly mother who's the least appreciative of anything, and that's just bugging me today too. I'm sorry.
Oh, I'm sorry, Karen.
Karen, I know what you mean. I have a mother who's exactly the same way. I feel for you.
Oh, I'm just tired, guys. I'm sorry. I'm just tired.
Well, I need to fly out there and give you a big grandson hug.
Yeah, you do, but we're
I'm
not allowed to hug
Karen's.
each other.
We'll have to do the elbow
Yeah,
bump.
I mean, that's the thing. I'm not even allowed to fly now to see my husband because then I can't come back in and take care of her. You know, give me a break. It's just so sick.
Well, how about if we bring a mask with us?
You know, and there's nobody on the damn airplanes. I mean, I'm talking to all my friends. It's just unbelievable. I mean, you know, first thing I did when I heard last night, you know, of course, you know, I understand probably more than most the intricacies of halting all the European market because it was my industry, you know. So the first thing I did is I text my girlfriend. I go, "It's a damn good thing you're flying South America." And she's like, "What are you talking about?" And I take a picture of the screen and I send it to her. She says, "I'm in bed. I got to get up early for my 5:30 sign-in." And she's like, "Holy shit." And I went, "Yeah, right." Because she does the Italian flight. You know, she's Italian. So she does Italy and she speaks German. So she does the German trips. And you know, a few of the others, but usually during the year. I mean, she only has 20 years with the company, even though she's pretty close to my age. She started late, so she can't fly it in the wintertime. She doesn't have the seniority, but you know, she knows everybody, and I get all the scoop, and I get the scoop from some of the others as well. And you know, this is bad. You know, I'm like, holy crap. And you know, when I see that kind of stuff, it's alarming. And I thought, well, I mean, I'm fine with it, but I know what it's going to do to this place. You know, people.
Well, you know, what's kind of funny is that, you know, with everybody freaking out, now they're joking of saying, hey, how to avoid the coronavirus. And they're showing like hockey games and there's only like one person in there.
Oh, it's true. I mean, these airplanes, you know, they're showing, you know, my buddies are taking pictures and throwing them on Facebook, and it's a joke. I mean, there's nobody on the airplane yet. A pilot buddy of mine, captain, I texted him a couple days ago and I said, hey, because you know, when the whole thing about Delta came out, because you know, my concern was, you know, they stopped funding. Well, nobody answered my question, but I had a feeling, you know, because most of my former colleagues don't read squat, and sometimes I got to smack them silly. But that's another story. It's amazing to me. I mean, it never ceases to amaze me. I hate to say this. I don't like to be such a negative Nelly, but I'm going to be one. I cannot believe how the masses are so stupid. You know, I mean, but they really are. And even my former colleagues, they don't read. And I go, what does that say? I said, you know, do you have anything going on upstairs? Can you read this clearly instead, you know? Let the emotions happen later, but let's read and find out the facts first before everybody starts having a hissy fit.
Well,
but
until everybody says it on Facebook, it's not true. So,
well, no, but they go back and
kidding.
forth, and I read this stuff and I'm like, did you ever read what you originally signed up to do, you know, 45, 50 years ago? Oh my gosh. It's just, it blows my mind. But you know, so they, you know, what they did is they just ceased to pay, at least at this point. They just, and I had a feeling that's what it was. They see, when we went into bankruptcy the first time in 2005, they levered off of people like me, because we're non-union, in order to get themselves out of bankruptcy, because we have a Social Security offset, which I'm not taking it yet. I'm not old enough, but I'm getting close. But not yet. But once I take my Social Security, it reduces my pension. Now, when they went through bankruptcy, I was a little bit too short on age, so that I got caught up in this stupid mess. And so my offset is greater, so that the government gets paid back. This is how they were getting paid back in the future for accepting the PPA, which was this Airline Protection something or other act, whatever it was. I got all the paperwork in the drawer, you know. So I'm telling you, I don't trust a lot, because I've seen this over and over and over again. They will lever, they will change the rules to suit whoever they want to. And I feel it, you know, when that it's coming again. That's why I'm looking at this thing and I'm saying, we got to watch out for this, because I don't care if they say this stuff is etched in gold, haha, no pun intended. It's not, you know. And if somebody wants to change some rules somewhere, look out, So I just want to make sure, that we're really watching this carefully, because I've been burnt so many times, over and over. I'm tired of it. And I feel it, I see it, and I'm thinking, oh my gosh, sometimes I have premonitions about stuff. And yeah, I knew some of this stuff would happen, but there was nothing I could do about it. My hands were tied, and that just pisses me off, but that's a whole nother issue. But my point is, all of these organizations, all these contractual agreements, everything, I even said it right in the very beginning. I said this about the Chinese and that nonsense, when Leah He came and signed the thing in the office. I said, something's wrong, right? I felt it, I saw it, you could see it, and you can't trust. There's that force majeure is in every doggone contract written on the face of this earth, and boy, they use it often. So I'm sorry, I'm ranting, but you know what? I guess we all deserve a good rant from time to time. So y'all can rant anytime you want to. I'll be happy to listen back, because I'm having trouble with the trust thing, and it's not you. It's the situation, the powers to be, they I just don't trust.
They've earned the distrust.
Yes.
They have earned it. And
they have, and I'm getting to the point of just really starting to get a little bit, skittish. How many times we got to go through this crap? See, Jason, when you get to be older and it happens to you a couple times, you'll finally say, oh boy, I remember when she was off on a tear. Yeah. And you'll say, yeah, I get it now. You just get tired, it's like you're constantly swimming upstream, and at some point, and you're getting nowhere, and it just it's a little bit defeating, and I don't want to be defeated, and I've had a great attitude about it, but today I think I just finally it just hit me, and I just said, that's it. So I'll be better, I'll be fine. I got it out of my system, shouldn't have done it on here, so sorry, just trying to catch up. But I took a look at these numbers today and went, oh my gosh. And it's going to get worse. So no, and the account, it's fine. I just wish I had taken some of it and put it to, I know what you're saying. I just feel like I could have gotten back into it again. I could have secured, some of it on the upside, and just, you never get hurt taking a profit, right? Isn't that what the saying says? And I could have thrown that in cash and then put the same amount, not deployed the whole thing again and just gone back slowly, and at least felt like I had secured some of it. That's all I'm saying. And that's in my case, not in everybody's case. Some of these guys, they're protecting everything. I'm protecting and building. So, I mean, I'm still fine. I'm still up on the account, and I appreciate it. You have no idea. I love my triple Qs. I think that's wonderful. We'll see and I know the SLV is in the same boat as the GLD, but and the EEM is fine. That's good. It's all good. It's all good. You're good. It's just the rest of it, which is my own doggone, problem. So, but I'm going to look into who was it that told me about the 401k, to borrow that and pay myself back. I mean, I know they have lendings, but who said that? Who was that?
That was Mark B in California.
Mark. Okay. Thank you, Mark.
And Karen, thank you
sir.
very much. Not all, speaking for myself, not all of us are good at ranting like you, so you're speaking for a lot of us.
Epic rant of the day.
Yeah,
Hey,
baby.
Karen, I know someone who lost $1 million, and another person who's lost about $350,000 through this.
Wow.
Hey, Karen.
Yeah. Yes, sir.
Hey,
And
this
that
is
guy's
Michael.
been on the phone the whole time and hasn't said a word.
No, I'm just, this is my first experience to hear you rant, so.
Yeah, sorry. Yeah, well.
Let it all out. Let it all out. We're
I'm
here
telling
for
you, I think I am. You guys got the bulk of it today. I'm so sorry. I'm usually not emotional. I usually have a pretty strong constitution, but I think I finally, I just hit a wall. So
You're tougher than you think, so don't, it's good to
yeah,
rant.
go ahead. I'm old. You can say it. I'm a tough old bird. I know.
No, I never said that. In
No,
fact,
but I did. And I'm telling you, it's perfectly acceptable.
I've seen your picture on the.
That wasn't me. That's not.
Wasn't me either. Trust me.
Listen,
my wife was ready to jump for that one.
No, oh, that's funny. Well, and I actually look a lot younger than that woman. Oh my gosh! Although after I just got my hair done today, I don't know. It's starting to get a little gray. So
I actually downloaded a new picture for you, and I was gonna upload it. I just haven't done it yet.
oh my goodness! It's just one more thing for the Chinese to steal. Give me a break, will you? They've already got my fingerprints and everything else because it's on the. I don't know. I tell you guys, I'm looking forward to the day where we can all finally get together, meet, and just kind of, laugh about it. Eventually
we're gonna make it all back, Karen.
Yes, dear.
I do have a couple of questions. Let me answer really quick. Anthony
counting
asks,
on you.
Anthony says, when do you anticipate closing the QQQ put? Most likely when the VIX is above $100. Sometime around that period is when I'll stop being greedy and pull the trigger on that, which could be sooner than expected. So,
well, doggone it, if we got the VIX going, you really think it's going to continue to go above 80? Isn't that what it was during the last crisis?
Yeah, I think it's going to pop 100.
Well, heck, if that's the case, you know what I'm thinking. Is it too expensive to buy? I hadn't even looked at it. Is it
Yeah, no, I wouldn't buy it now. We got everybody in when volatility was below 50, I think.
No, I'm talking about just buying a VIX call.
Oh, yeah, that's TLT's way to play this.
He loves that TLT.
Yeah, that's the way to play the stock crash without risking losing everything.
Oh, well, my goodness, the VIX is all the way up to what, 75 now? Yeah. Oh my God, what a joke. It's ridiculous. Oh my God. That's crazy. Went up 40% today, man. That would have been a nice pop for the day.
Yeah.
Next time we know that Trump's going to make a speech, doggone it, I'm buying the VIX. Even if it's just for the day. Holy cow.
I see TLT going well above 200 and probably closer to 300 over the course of 2 years. So,
do you have a question, Michael?
Yes. Jason, what happened with the TLT today? Is it similar?
Yeah, same story.
Okay.
So people are. So if you do rewatch, how much of today's webinar Bootcamp did you catch?
Honestly, I just got back to my office here 5 minutes ago, so I didn't catch.
Okay, replay today's presentation. I spent probably 30 minutes going through that.
Okay.
So no change in perspective. And,
okay.
And yeah, I really like how we're positioned. So.
All right. Now I didn't buy the leap for the 21, so maybe it would be a good time to buy that.
Yes.
Okay.
I would say it is a good time.
Okay.
Since you're saying it's going to take so long, how do you think that some of these more short dated calls that you've got us in, how is that? How do you think that's going to work out? You got the closest one is the 320. That's next week. 320, 327, right? 403 and 417. You still think those are going to hold up?
So yeah, so those near the money options we will hold to probably the expiration or near the expiration. Yeah.
All righty.
It's when we want to do those ridiculous 1,000%, 10,000% trades. Yeah. That I'm going to start trying to time it. So that one we did today with the leap on the TLT is of that nature.
I see.
If the TLT doesn't go up, America's done for. That's just really all you got to realize here.
Yeah,
I hope you're wrong.
Well, I pray you're definitely wrong.
So TLT will go up.
I love the confidence.
It can have some volatility. They might let the yield go up a little bit so they can have more room for people to make money. But in the grand scheme of things, they have to raise a lot of money to solve the crisis, and they need to hand that money to the healthcare sector. So once you realize that's really necessary, then that's what has to happen. So they have to. So that's why they came out and said they're going to start buying other parts of the yield curve today. And so we essentially have the Fed guaranteeing that we won't have massive losses or volatility by owning treasuries. That's essentially the reason they came out with that. Now,
why do you think no one's thinking that right now? And it's not, even on that leap. I mean, I didn't get a chance to put that on today either. And boy, that bid ask.
So TLT is not the real asset. You guys realize that, right? The TLT is for poor people.
Right.
So TLT has nothing to do with the real underlying asset being exchanged. So central banks, large banks, medium-sized banks, pro hedge funds, they're the ones who are trading that asset class. It's about 800 billion bucks. So yeah, so the simple explanation, why isn't the TLT flying up yet? We go to the example of Anwar. He's holding on to his Microsoft and his Alibaba. He's down 30%. He's like, oh my God, is it ever going to go up? Well, when he does sell that, it's not going to cause him to go sell everything else he has. He can sell that for a loss, and that's that. He's in cash. What's going to cause you to go sell treasuries when you know very well that there's rate cuts ahead? Why on earth would you go sell the TLT or the 30-year treasury? Well, that's going to have to be because you had no choice. So how do you end up in a predicament where you're not just losing a part of your investment, you're losing more than your initial investment or more than the money you have? That only happens in really primarily in two situations. One would be selling puts against stocks, and the stock goes dramatically below your put strike. When that happens, you're down 100%, then you're down 200%, then you're down every dollar, all of a sudden it's multiplying your loss. Okay, so now, shit, I'm down 300%. I don't even have enough money to cover that. Now I have to sell everything I own and I'm bankrupt. So these sort of market moves, when you get people who look at stupid statistics in the past and try to use that as a strategy into the future, those are the sort of people who are having massive, massive losses. And it's happening in the oil sector, the natural gas sector, and in the equities sector, where you're going to be in a position where you've lost more than you own and you have to liquidate everything. So unfortunately, that can create a little bit of a drag on the TLT for the foreseeable future as we continue to see people go bankrupt. The Fed has come in and said, hey, we're going to absorb that shock with QE. That's what they came in today. So that's good for our gold position. So the silver lining is that we're playing both those markets. Most people, again, always, hey, look at 2008. Gold miners went down during 2008 and it didn't go up to 2009. So they correlate that to the stock and they think, they're not putting together the full puzzle here. Gold goes up because of QE. Bonds go up because of rate cuts. Just keep that in your head and you're going to do really well during this period of time.
Wait, say that one more time. That last sentence.
Rate cuts force the value of bonds to increase.
Right.
But they're done to support the private sector. Okay, but what's the relationship? We have to borrow money from the government. The government needs to borrow money and bail out the private sector. So they incentivize the investment into bonds.
Right, okay.
Okay, QE makes the relative value of the dollar depreciate. So as long as we're not mining gold faster than we're printing dollars, then the relative value of gold will go up. So if the relative value of gold's going up, then gold miners have a great business model. Plus, a little bonus for them, oil's cheap, so they can mine for less than they were previously. So we're really set up very well. People are blowing out. They're losing 100%. They're losing more than 100%. They're being forced to liquidate everything they have, regardless of whether it makes sense or not. So that's what I believe is happening right now. We can see it with the stock crash and the oil crash.
Yeah, oil. What a joke. Sorry.
Karen needs a good hard whiskey tonight.
I need a stiff drink. You better believe it.
I'm already getting in my cabinet.
I'm serious. Yeah, maybe a good tequila. That'll work. Okay.
Yeah. I got some tequila in my doomsday area.
There you go. Good job. Just make sure you have some fresh lime and some good salt.
Yeah. Oh yeah.
Hang in there, Karen.
Oh
Run, but you're in my prayers.
Thank you. I'm sorry. We all have our issues.
No, no reason to apologize.
Oh well.
We're here.
I feel like it's a bunch of guys, hey, it's my pals. What can I say? Sorry, I let loose.
Take care, Jason. Thank you.
Thanks, Oscar.
All righty. Well, yeah, you made me feel a little bit better. I'm looking also at this. I'm sitting here trying, to look at everything in the office, and my distraction was there, that long leap, and I'm looking at the price point you got, and I'm just wondering, this thing's going to fluctuate. There's $5, on that difference, 165 strike and a 170 strike. I'm like, I'm going to look at this because I didn't get it on today, and I'm thinking, okay, let's see. All it takes is one little calming period tomorrow for some silly reason, and I might get it at a better price, and maybe even at a lower strike. So. Or the same price at a lower strike. I'm going to take a look at that. I'll get it tomorrow. Mañana. Oh, by the way, mortgages. Let me just tell you, how all these rates are going down. You would think we could refinance for a reasonable price. You all were talking about this at one point. Yeah, baloney. These guys are not budging very much, or if they are, they're keeping their fees high in order to get it. So they're really they're taking advantage right now and holding up their fees. So it's not really making a whole lot of sense depending on where you're at. I mean, I got almost 10 years in this one place, and I should easily be able to bring it to a 15-year. But even at a 20-year, by the time you pay fees, it's the same amount out of pocket as what I'm paying right now. It's stupid. So I was a little frustrated with that yesterday too.
So, bastards.
Yes, exactly.
All right, guys, I've got to get a move on myself here, but this was a great session. Thank you, everybody, for joining. And Karen, get some tequila, let loose a little bit. I think you deserve it, and hang on tight. We're going to do well.
What you said, and I'll catch up. I promise. Thank you.
All right, guys. Well, we'll see you tomorrow on the webinar. I appreciate everybody, and we'll continue the discussion tomorrow. So thank you so much.
Thanks for the support, guys. Appreciate it.
Thank you.
Sorry.